and welcome. We are here today to speak with Mark Bartlett, CEO of Strix PLC, who have today announced a trading update. Thanks for joining us, Mark.
Thanks, Anna.
First up, obviously, the last time you released a set of numbers back in March, we were at the height of the pandemic. Lots of uncertainty. Over the last 4 months, obviously, you've had a chance then to react and help the business respond. Can you tell us the changes that you put in place over those last 4 months and how the business has responded?
Yeah, certainly. I mean, keeping the employees safe has been our key priority throughout, and our staff have been extremely supportive of the initiatives we put in place. You may remember going back to 3-4 months ago, we were very quick to react to the pandemic in China. And that was really thanks to the support and dedication of the local team during their national holiday. We only actually had 1 week of additional closure in China, which was in line with the sort of local regulations. Over in China, we implemented a host of initiatives, from temperature checks, masks, social distancing, remote working, all of which now seem quite normal. But we also went to picking up individuals in dedicated transport. We implemented a simple form of track and trace on their mobiles. And to an extreme, we even set up our own disinfection tent outside the factory, which generated a mist that they would walk through that disinfected all of their clothes as they entered the factory, giving them much greater confidence as to their safety. These measures were really successful in China with no positive cases reported. We've then taken those lessons learned and really started to look at similar initiatives in our other locations, including the Isle of Man, the UK, and over in America, to protect our employees, as well as implementing extensive use of video communications to support remote working throughout the global organization. As a company, we have always had very strong focus on our financials, and this has never been more important to the business. Reducing capex and variable costs where appropriate to preserve cash flow, as well as implementing a number of efficiency measures in the organization. All of this has been done while still investing in our management and without delaying any of our strategic initiatives. For example, our factory in China is on schedule, both in terms of budget and timescale, with the external construction now complete. We also plan to still have 14 new products ready to launch this year, as per our original schedule.
That sounds very encouraging. I'm sure some of those 14 new products are in the kettles market. But can you give us a good sense of how quickly kettles have bounced back, perhaps both in China and in the export markets as well?
Yes, certainly. I mean, the first half was heavily impacted by the pandemic. First with the supply disruption in China, where more than 90% of kettles are now produced, and then with the various global lockdowns. China itself actually has bounced back very quickly, and we expect that recovery to continue into the second half of the year. So that is a very promising signal. The export markets overall, they lagged a little bit behind, as they were first hit by that disruption in supply from China, and then they had their own issues of their own lockdowns as the virus spread. However, we are already seeing some encouraging signs with some recovery in June, as the pipeline begins to be refilled and those lockdown restrictions are gradually eased around the world. Despite the pandemic, we have maintained our global position, and we are really well positioned to benefit from the recovery, as our new products, such as the U9 series, for instance, continue to secure incremental specifications. We've already seen a marked recovery in June, and moving into H2 with a very strong order book for July and August, providing us a level of confidence that we can deliver profit in line with prior year, assuming no significant additional lockdowns or any unforeseen macroeconomic shocks.
So with those orders coming through in July and August for the kettle segment, it sounds like that is picking up speed again. If we turn our attention to the water segment, is it fair to say that that hasn't suffered in the same way and has held up slightly better during the pandemic?
Yes, that's true. The water category has actually performed well, and we've seen a growth of around 6% in the first half of the year compared with prior year. There is a couple of reasons for that. I mean, people in this environment are very concerned about their health and wellness, and this is a product that actually can be bought online, so it's very easy to actually buy those products. This is also a very important platform for us in terms of sustainability and also looking at ESG, because a number of these products actually do provide health and wellness, but they also actually reduce the use of single-use plastics as well. replacing the bottled water. There's also been some new changes within the water category. For instance, the acquisition of Halo Source last year has gone very well, and that integration is almost complete. The research team over in Seattle are working really hard on a number of new products, and we have 7 launches planned before the end of this year in this particular category. Australia, the water bottle, you may remember, is also gaining momentum with some very positive medium-term commercial opportunities. And we have secured some really good contracts with the Halo Pure technology, opening up completely new segments such as dental care, and even within the farming sector for the sterilization of drinking water. So this is a really good opportunity for the long term. We have a very good trade brand position with Aqua Optima, and with these new additions, plenty of opportunity for growth in the short to medium term.
Well, it sounds like the water segment obviously has the strong ESG credentials attached to it, but that might also be said to be true of the appliance sector, where I know you have some further developments underway in the mother and baby sector, as well as hot and cold quick flow water. Can you tell me anything more?
Yeah, we're pressing ahead full steam, again, excuse the pun, with all of our new products, and the appliance category is absolutely no exception. Certainly some of the brands are a little bit slower to launch given the lack of footfall, but we are ensuring products are available as that demand increases. We have some really exciting products coming to market that are focused on energy efficiency and really just making life simpler for consumers. For example, the Aurora water station that will provide instant boiled or chilled water as a standalone unit on your work surface. Also, duality, that is in tooling at the moment, and is effectively gives you the utility of a kettle, but also allows you to have a single cup dispense, avoiding the need to boil water that is not required. And we all are guilty of overfilling our kettles, I'm sure. In the baby care products, there's a number of products in development with leading brands in both North America and Asia, really moving us to a more global position in that baby care segment. And we have signed up more than 10 new agreements for global launches within these categories over the remaining part of this year. So very positive outlook for the appliance sector.
Looking ahead then, Mark, obviously the first half has been undoubtedly difficult for everyone, but anyone running a business has had to face a number of new challenges, and top line has dropped. But as we look into H2, it sounds to me like there are good grounds to feel positive, not only with the steps that you've already put in place, but with the orders that you see coming forward.
Yeah, no question. First half has been tough, but Strix is a very resilient business. And with the care taken on managing our financials to support our key strategic initiatives, we're in a very strong position to take advantage of the recovery as and when it comes. We manage our financials very closely. We're cash generative, allowing us to maintain low debt while still delivering on our dividend policy. And we also secured a new facility that is very flexible and provides appropriate headroom for the future, allowing us to invest in appropriate strategic initiatives. Despite first half sales being down 21%, we are seeing very good recovery both in China and in the regulated markets, with a positive order book for July and August, giving us confidence that a seasonal second half, coupled with the recovery, will deliver profits in line with prior year, barring further significant lockdowns or unforeseen macroeconomic shocks. And of course, with the new factory well on track and set to be fully operational by August 2021, we're all very well prepared to realise the full potential of Strix going forward.